Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Southwest stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 17 billion market cap, trading at 28 bucks a share and 600 million shares outstanding. Southwest is a passenger airline company that provides scheduled air transportation services in the US and some international markets. It has a fleet of 817 Boeing 737 aircraft, and they serve 121 destinations in 42 states. Also, BC, Puerto Rico, and 10 international countries that include Mexico, Jamaica, the Bahamas, Aruba, the DR, Costa Rica, Belize, Cuba, the Cayman Islands, and Turks and Caicos. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have nice free cash flow in 21, 1.8 billion, but since then they've been bleeding cash, which is unlike Southwest, negative 1.7 billion in trailing 12 months. But it does appear they're investing a lot in CapEx because they do have positive net income. Net income is the profit or loss on the income statement. It's revenue minus expenses. But that has gone down a lot, from 1 billion to under 100 million. Their revenue looks okay. It almost doubled from 15 billion to 27 billion. They pay a nice dividend, 2.5%, but they have negative free cash flow, so that means they need to add debt to fund their dividend. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 26 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company of $19 billion. We divide that by 600 million shares. And we get a calculated stock price of $32. They're trading at $28, so they're trading at 11% discount. It's a buy according to the model. Do you think it's a buy or a sell? Let me know in the comments. Simply Wall Street is real bearish on this one, $11 a share. They say they're 150% overvalued. 18 analysts priced this stock at 41, so they say it's undervalued. There are 16 companies in the same industry as Southwest, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a good amount of CapEx, 2.6 billion. Most of their CapEx spend is when they buy aircraft. They have the best debt to equity ratio on this list. For every dollar of equity, they have 90 cents of debt. They pay a nice healthy dividend, 2.6%, but they do have the worst free cash flow, negative 1.7 billion. It's similar to JetBlue, almost identical to JetBlue, which is interesting. They rank second in market cap, a really good price to book, 1.6, better than the average. Their net income is extremely low, so it looks pretty crazy, their PE, 217. We can't look at their price to free cash flow, negative free cash flow. Price to sales, 0.6, worse than the average. They generate 27 billion of revenue. That's the fourth most on this list. And their 5-year annual revenue growth rate is equal to the median average at 4%. Here's their latest income statement, the second quarter of 24 compared to the second quarter of 23. Passenger revenue is up from 6.4 billion to 6.7 billion. Freight revenue is down a little bit. Other revenue is up a little bit. Their largest expense is salary, 3 billion, then fuel, 1.6 billion. Then some other smaller expenses like repairs, landing fees, depreciation and amortization. Total expenses 7 billion, up from 6.2 billion. Operating income is down. It was 800 million, now it's 400 million. It was cut in half. Income before taxes, $500 million, 111 million of taxes. Net income, 367 million, which is down quite a bit from last year. Their EPS, 61 cents. That's almost cut in half. They're adding shares. Last year, 595 million, now 599 million. Diluted shares, 643 million. So if all the convertible securities converted to equity, that's how many shares outstanding they would have. So to summarize, I have them trading at 11% discount. They have a 5 out of 10 ranking. Just because they're slightly undervalued, would I buy them? It's always going to be 1 for an airline. I would never buy an airline. Ratio is 3 out of 10. Terrible PE. We can't look at their price to free cash flow. Financials 4 out of 10 because their revenue is up 71%, even though their free cash flow looks terrible. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.